Hey everyone, it's Zach with Palantir Research. It looks like Palantir stock is flying high again in the pre-market stage here right after the holiday weekend. It's up almost around 7% here, at least at the time of recording, so we're in deep into the $14 range. But why is this happening? So if you do look up Palantir news specifically, nothing really new comes up. Over the weekend though, they did have some commentary on their Merck open source development there. However, it doesn't necessarily seem relevant to today. What I think is happening is more on a macro scale, but there is of course stuff happening with the AI hype still, especially around Nvidia, still doing great there. But if we do go over to like CNBC, for example, the US government has basically seemed to getting closer to a tentative deal on the debt ceiling. So for those who don't know, essentially the government is only allowed to take out so much money. Not every country operates this way actually. Sometimes they have a moving debt ceiling, things that grow over time naturally. Of course, there's inflation. But for the US, there is like an actual fixed number here. So what's good about the deal, at least for Palantir, is that for the defense spending, there isn't going to be a cap on that. So I believe it could be up to a 1% increase there, but I'd have to double check that. But everything else, right, that's non-defense actually is going to have a spending freeze. So into 2024 and then by the beginning of 2025, there's going to have to be another fight over the debt ceiling there. But this is going to move the stock, at least in the short term, just because, I think the market has short-term memory here where, this happens every time where there's going to be a debt ceiling talk, there's going to be negotiations. People are going to say, oh my gosh, we're going to default on our debt. And that'd be very bad for the US dollar and bad for the economy as a whole, for the whole United States and around the world. So it's like we're playing this game of chicken every time this comes around, but every time we know which side is going right and which side is going left. So we're not actually going to crash head on. But that's my assumptions today. You never know what's going to happen in the future, of course, but we seem to fall for it every single time. So what's this doing as well? So it's not necessarily just Palantir that's great for debt ceiling talks. This is just for general stocks. There may have been pricing stocks leading up to this that maybe there would be a delay or something of the sort where possibly the government would default, or at least a small percentage. So now it seems that people are basically saying, okay, it's not going to happen at all, so now we're going to fully price this in. So yeah, it just really is a game of the macro right now where everything seems to be pushing up, at least for the market as a whole today, right after the holiday weekend. But it's not necessarily specific to Palantir, especially if you're looking for a reason why they're going up. So there is still euphoria in the market, I believe, in AI. And leading up this week, on June 1st, there is going to be the AIP Con. So a lot of investors, specifically on Palantir, may be wanting to buy shares up before then in order to at least take advantage if we get some groundbreaking news from a client, or maybe the AIP platform is so much better than anyone expected, or the use cases are showing that real value is being made from clients, and in the long term, that should flow into the financials. But it's really just anyone's best guess right now. I feel like right now it's just the macro pushing things up in the short term, but we'll see over time. And when it comes to valuation of Palantir stock, so I'm not going to give any price targets or anything of that nature. Everyone's going to be different in how they model this, but I just want people to remember that yes, things can become overvalued, things can become undervalued over time. So what this means is that the market likes to price in expectations. So just because something becomes overvalued doesn't necessarily mean 100% it has to sell off to reach the valuation of the time that you're doing it. Sometimes securities grow into their valuation, but we did see back in 2021 and 2022, so there's going to be overvaluation there, but we saw things come crashing down. Now, the difference between then and now is that interest rates were starting to increase, and they increased some of the fastest in history. So from that perspective, you could say valuation may have been correct or frothy with those low interest rates, but then people had to all bring down their valuations once interest rates rise. Basically, it just means that you can get a better return on your money somewhere else, so it's going to make valuation much harder for stocks to be much more frothier. In that case in time, but now we're in an environment where rates are higher still or still high. However, we don't see or don't expect, and the market doesn't expect, rates to continue rising, at least at a fast rate. So even if we keep it at a 25 basis point raise each time versus 75 basis points in the past, it's a different environment because the market prices in expectations. So I just want to keep this in mind for people who say overvaluation means that you're always going to come crashing down. And of course, undervaluation means you're always going to fly up in your stock price. It doesn't necessarily mean that. Like I said, maybe we can go through a stagnant period of not moving, or we're going to go up and down. Maybe we're just waiting for financial figures to see if we can actually grow into a rich valuation. Or maybe not. Maybe we do come crashing down back to those historical levels that we've seen the past year, where maybe there's a buffer back to $7, $8 again. Who knows? No one can actually predict the short-term price range here. What you can only do is look at the financials and then see if the business is growing, creating a moat for themselves, has a product that differentiates themselves, and AIPCon, of course, coming up, is going to be a great place for investors to do so. You might not necessarily get the numbers, but you get a better idea of what is being shown, and it's coming from the client's mouth, not from the product developer themselves or those who are selling it. So this is the best kind of marketing coming up. Just wanted to give my thoughts on the macro as well here, especially when the price of the stock is going so crazy in recent days. It feels like every pre-market, there's always a huge swing up $1, but we never know what's going to happen during the regular market hours. But yeah, just let me know your thoughts below, and I'll see you in the next video.